Hello, welcome to the Boise market overview. We'll start off with average sales prices. So if you take a look at this chart and look at the gold bars, and if you look at the far right, you'll see the most recently reported numbers for August. And that average price was $643,295. Now, one of the main things that we should be looking at is there a trend showing itself? And if we look around January of 2023, we notice that sales prices took a dip because of the change in interest rates. Overall, sales prices have been going up. One of the things that we'll have to keep an eye on as the market progresses is sales prices aren't going to be flat. They'll either be going up or they'll be going down. But overall, since the increases in interest rates, ironically and interestingly, we've seen an increase in sales prices. The next line we'll be looking at is inventory. That'll be the pink line that has got a lot of large peaks and valleys on it, kind of above the blue line. And most interesting is the severity of the drop. A lot of other markets are trending downwards as well in terms of inventory, but due to Boise's overall smaller size, it seems like it's showing up more significantly than in other markets. One of the other things that, let's focus on the key point first, is that inventory is down. And that'll have a lot of repercussions. And part two of that is, what would be some of the reasons? And one of the big reasons that we're all well aware of, because it's been brought to our attention quite a few times, is that people are locked into favorable rates, and why are they going to want to move? Granted, let's give them that. That might be the primary reason. And so I was saying, what are some other reasons? And one theory that someone had been putting out is that people that were considering moving, like say in the next 5 years, once COVID hit, everyone moved at once, and maybe that the volume of moves that would happen after that would slow down because they all moved. I can't disagree with that one. That one's kind of interesting. I don't know what the total volume of that would be. That'd be a little slightly different analysis than what we have here. One of the other options that I was thinking about would be general market participants as well as investors maybe sitting on the sidelines. It's not that they're not going to make a move, or they wouldn't be in general being precluded from interest rates per se. It's the other factors of the unknown that could be having them sit out. Sales. So the bottom blue line is sales. And what's interesting about this is August had 481 sales for the month, which puts it at some of its lowest points that we've seen historically, except for that those historically low points are in January, when it's customary to see a drop in inventory. August is usually much higher, so this is a big deal. We are seeing a lot less purchases, and you could make the argument that lowest purchases ever. Probably I didn't go through and check every August, but if you say lowest purchases for this time of year within the last decade of this data, you'd probably be on the money with that statement. This chart has two data points on it. The lavender line is surplus inventory, and the blue columns are days on market. For this presentation, we won't go into the surplus inventory line, but days on market, I want to bring that to your attention because it's a data point that many people don't give a whole lot of thought to unless they're sitting on a home for a number of weeks that they're trying to sell, or let's call it a number of months back in the old days. And they start getting antsy and they want to, lower the price to find the buyer. That's kind of the only time that people really paid attention to days on market. But what I want to bring it to your attention is that days on market can pretty much on its own tell you everything that's going on in the market in terms of supply and demand and what's going on with sales price. So think of it like this. If days on market is going down, prices are probably going up, inventory is likely going down, and purchases are likely going up as well. If days on market is trending upwards, then you'll have downward pressure on prices. Doesn't mean prices are going to be going down, but you're going to have some downward pressure on them. And you will also see inventory increasing, and you'll probably see a corresponding decrease in the number of purchases. So days on market, if some odd happenstance that you only had that one data point, it could tell you a lot if you knew the trend and the direction it was going. So in conclusion, what's the data telling us? Well, it's pretty obvious that the overall size of the market is shrinking. When I say size of the market, I'm talking inventory and purchases. That's taken a gentle drop down, and we don't really know how far down that's going to go. And one of the implications that that's going to have is on market participants such as lenders and real estate agents and escrow agents. They're going to have a lot fewer deals to extract fees from. So we're going to see an overall shrinking on the economic value of the Boise real estate market as the overall market shrinks in terms of transactions. And one inference I think we can make is that it's quite possible that we're going to see some price increases in the short term. Though we're seeing a shrinkage in inventory, we're still seeing a sufficient amount of buyers for how much inventory is shrinking. And as I pointed out, days on market is pretty low at 27 days. So unless that jumps up, we're probably going to see pressure on prices to increase, especially as the amount of good purchase options shrinks for the buyers that are out there. And also, I want to draw your attention to a video link I'll put up at the end here that you may find interesting, that goes into how buyers being rate locked and deciding not to move, how if that wasn't the case, it really wouldn't help our inventory much.